Good day, everybody. Welcome to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you're new here and are not familiar with what we do each and every week, we talk about earnings and stocks that are having earnings this week. And we give you insights into the big movers and those that may not move big. And why is this important? Well, we are option traders and we use options to make money on stocks, and earnings are a popular investment strategy or a popular target uh, on a quarterly cycle. So what we do is we look for these stocks that are ready to break out, or we look for these stocks to consolidate, and we use two completely different strategies around those, and I'll explain as we go through the show. So this week we're kind of winding down. We got 2 weeks left of the current earnings season, and then the next cycle begins the second week of April. So you'll want to stay tuned because we do have some key players that are announcing this week. Let's get to it. All right. So don't forget through this show, we have a chapter feature at the bottom because we do talk about quite a few stocks. So if you want to jump to a particular one, you sure can. As you can see on your screen now, we have this week's list. All right. There's just 22 names that I'm focused on this week. And I picked, of course, the best ones that are potential breakout candidates. Those are on the left. And the consolidating candidates, those are on the right. And how we differentiate those is by the percentage move. So the double digit breakout candidates, so 10% or more, are on the left, and the single digit performers are on the right. All right, so let's get to an example of what we call a single digit earner. All right, we call these quiet candidates, and these are done through a service, a publication, a trade service that we call Delta Neutral Income. All right, and here is an example of a quiet stock. All right, this is Pfizer. And you can see here over a 12-month period, literally 5 earnings cycles, that this stock just doesn't move very much. This stock moves single digits almost each and every time it has an earnings announcement. As you can see, the last time the target was about the estimated move. And again, we use how the option market makers are pricing the options. They were targeting a 4% or less move for Pfizer, and that's exactly what it did. All right. And that's what it's done for the past 5 earnings cycles. It just doesn't move very much. So we call this a quiet stock. So let's go to our list and we can start with KB Homes. And you can see here we have a few, and you might recognize some of these names like KB Home and McCormick, the Spice People, Jeffries, the financial firm, Paychex, Winnebago, to just name a few. In fact, let's take a look at our charts, and we're going to start with KB Home here. KB Home is actually up 1.8% already today, but they have earnings after market close today. And this is a $60 stock that the estimated move is going to be less than 7%. So here's the key with this. If we can find what we want to do is sell option premium into these, and we do this through a strategy called an iron condor, okay, where we're selling premium on expensive options. And if we can get the break evens of our trade, say greater than 7%, that gives us a high probability trade. I'm going to show you an example of that in just a little while. But right now, we're focused on our quiet list for this week. And they do have earnings today after market close with a single digit move of less than 7% is the target. So then let's get to the Spice People. Always a fun and interesting one to trade. This is McCormick, and they have earnings on Tuesday, the 25th, before market open. So tomorrow morning, and the expected move here is only 6%. You can see the stock is in a trading range of about $15, okay, between $70 and $85. And if I can, I'll pull up a little data here. Look at the double top here. We have at 85. That's pretty much some significant resistance. And you can see here, the lows previous were about 67.50. So it does have a little ways to go down if it decides to get in a downtrend. But pretty flat day today. And then they'll have their earnings tomorrow morning on March 25th before market open. And a move, again, less than 6% is what the option makers are pricing in. All right. Another quiet stock for this week is we're looking at Paychex. Now, this is one when we get stocks that are over $100. I really like these because it gives us more options, so to speak, on how far away from the money we can go. And Paychex will have earnings on Wednesday, March 26th, before market open. And the estimated move here is less than 6%. All right. So with $140 stock, oftentimes you can get premium quite a ways away from the money, if that makes sense. So the money right now is at 144. The mark is 144.16. That's the current price of the stock. And, we could go maybe the 135s or the 130s, somewhere around there, sell that premium. We never sell naked. We always hedge our naked puts with a long put further out of the money. So if we sell the 135s, we might buy the 130s, for example. Okay. And we hedge that risk off. And then the iron condor would be both sides, sell call spread, sell put spread, combine those together. All right. So next on our list is going to be Jefferies. All right. Always like Jefferies because, well, that's my name. And Jefferies Financial, even though they spell their company name funny in my book, they have caught a little bit of a bid here, as you see. They're in a nice little rally, a little uptrend, and they will have earnings on Wednesday, March 26th, after market close. Now, the expected move here is about 7%. Now, the key here on Jefferies is, as you notice, as you can see here, this stock is quite a bit of a mover. All right, here just in the 7 to 8 months worth of data that I'm showing here, you can see that it rallied from low 50s up to 80, and then it came down to the upper 50s, or excuse me, low 50s, and now it's starting to rally again. So this stock does move. Now, we're not worried about the overall movement, as you can see here. So a stock going from essentially 55 to 80, we're worried just about the earnings announcement. So even tomorrow on Tuesday, I might be looking for an iron condor on Jefferies. If it's wide enough and I can get my break even, say 9 or 10% away, I will then sell that iron condor and look for that single digit move to capture that premium. And if it's a little confusing on what I'm talking about, I'm going to show you an example. As I mentioned before, I'm going to show you an example here in just a moment. So stick with us. The last one on our quiet list this week is Winnebago. Now, Winnebago is interesting just because this was a hot stock during COVID, as people were looking for something to do with coat, that was kind of solitary or by themselves. So RVs became a big industry during that period. Then post COVID, things get back to normal. People are flying again. People are taking other forms of transportation, and then the market started to decline. And as you can see, Winnebago has been in a bit of a downtrend here for a while. If I pull in more data, you can see here that this was a $75 stock in relative history, and now it's trading at $34.65. Now, Winnebago will have earnings on March 27th. That's Thursday, before market open. The estimated move here is less than 8%. So this stock has moved before about 10%, but most of the moves, as you can see here on the chart, are not very big. And I have the earnings announcements with these vertical lines, and the stock just doesn't move quite that much through the earnings announcement, not compared to our breakout stocks, which we'll get to here right away. So if you're liking the content that we have here, be sure to like and or subscribe. That really helps us out and also helps us get the attention of other traders like you. And we do provide a lot of juicy content. If you are an option trader, and you will find value in what we talk about each and every week, because there are some really great trades, as you will see, and we show them here live. We do a live trade each and every week right here. And we've had a whole string of winners, an occasional loser, but man, we were back on the right side of thing. We had a loser about 3 weeks ago, and then ever since then, we've been winner. So let's plan on another winner today. All right, so let's get back to our breakout stocks for today then. And you will, let me show you an example. All right. Of a stock that is just always on my list, and that's Akamai. AKAM is the symbol here. This stock does not have earnings this week. Neither does Pfizer, which I used in the previous example for the quiet stocks. But Akamai is always a big mover. You can see the big gaps in the stock around the earnings announcements. The earnings announcements are highlighted by the vertical red line and then the ellipse of where the price was after the earnings announcement. And you can see on the last earnings announcement, that stock gapped down and then traded down throughout the day, ended up closing down over 21% on the day. And the estimated move by the market makers, if I remember correctly, was about 14%. So that was actually a big winner for our subscribers through our Delta Neutral Breakout publication. And they, this was an announcement that came out. I put it out right before the earnings. I liked the setup, and we had big profits on Akamai at the time. So let's get into our list this week, because even though we're on the downside of this earnings cycle, again, only 22 stocks on my list, only a handful here. There's some key names that are having earnings this week, including GameStop. Boy, the meme stock that was all the rage, 6 to 8 months ago. Chewy, Dollar Tree, Lululemon. And so let's take a look at the chart, and let's take a look at where the option market makers are pricing out these potential moves. Now, the first stock on our list is GameStop. All right, they're going to have earnings tomorrow. That's Tuesday, March 25th, after market close. And the expected move here is greater than 20%. Now, this stock, as I mentioned, boy, look at some of the crazy moves this stock had in the past. All right, I mean, just crazy. Some of this was around earnings, some of it wasn't. All right, and you can see that the stock does tend to gap around and move around pretty substantially. The key here is getting the right pricing. Even though it's expecting a big move, does not mean a option strategy will make money. For these breakout stocks, we use strategies such as straddles and strangles. All right, simple strategies: buy call, buy put, buy call, buy put. That's all we do. So straddles, same stock, same strike price, same expiration date. Strangle, different strike prices, meaning you buy a call at one strike price, a put at a different strike price, same expiration date. So very simple, no margin required. But just because this is a big breakout candidate doesn't mean you're going to make money on it, because if the option market makers are pricing in a 20% move and the stock does gap, but it only gaps 19%, well, then it's not a good trade. What we need to find is an edge, okay, where maybe the option market makers are not pricing in based upon historical performance of the stock, or it doesn't line up, something like that. All right. So next on our list is Chewy. They will have earnings. Again, this is the pet food company and toys and all that stuff. Always kind of a popular company because people love their pets, right? But this is the $34 stock. And they will announce on Wednesday, March 25th, before market open. And the expected move here is greater than 14%. All right. So they're pricing in a nice move. Now, again, the key here is option pricing. If I can find option pricing around 10%, that might be a 10% move, then we have a little bit of an edge. But oftentimes that's not available. Okay. Their option market makers, pricing is very efficient, and usually we get it pretty close to right on. So that's why we always look for an edge, and it's just not automatic that we put a trade on each and every candidate that is a potential breakout candidate or quiet candidate for that matter. It's all about the pricing. All right. So next on our list is Dollar Tree. Now, Dollar Tree is an interesting one because it is on the verge of becoming kind of a quiet stock. All right, meaning where its earnings events are less than 10%. But the last earnings event, back here, I mean, two earnings events ago, actually back here in September, this was showing, hey, Dollar Tree might be back. Okay. And so this is kind of one that we're just watching right now. It was for a long time a great breakout candidate. The breakout moves have been declining. They're, as you can see here, the expected move is just around 10% for the stock. It used to kind of gap around much bigger than that, and it did back in September. But the Dollar Tree will have earnings on Wednesday, March 26th, before market open. And the expected move here, as you can see, is right around 10%. So you would definitely need some good pricing on your options. And what I mean by that, in this case, with the stock trading at $69, I would want my straddle or strangle to be priced less than 10% of the stock price. So I want it to be like $7.50, or excuse me, I want it to be $5.50 or $5. And you're going to find that option market makers, they pretty much price right on. And that's where the potential for disaster comes in. If you're just careless in your application of these strategies. All right. And so, lastly, let's take a look at the always popular Lululemon. All right. Lululemon will have earnings announcement on Thursday. That is 327. Sorry about that. Not 3.37. That's after market close. The expected move here, and I'm going to edit that because that just drives me nuts. So, we'll edit that real quick. There we go. All right. So the estimated move there is going to be greater than 14%. All right. And you can see the last earnings announcement that is right here. The stock did gap up nicely. All right. And had a little follow through before trailing off. All right. Before it started to have a little pullback. So, Lululemon, symbol LULU, will have earnings. Now, the problem with Lululemon is it's a $300 stock. So this is only going to be appropriate if we found the pricing to be appropriate for us. The option pricing is going to be, around $2,000, $2,500, $2,800 for a straddle or strangle on this particular stock. I mean, it's going to be expensive. All right. So that's where it's only appropriate for larger accounts. In this case, an account maybe over $30,000 or, maybe $50,000 and greater. Smaller accounts like $10,000 or so, this would not be appropriate for. All right. So just to kind of recap, let's show our complete list one more time. And you will see that we do have, like, really, even though there are some stocks having earnings on Friday, my list is not all inclusive. All right. Those stocks either didn't have options traded on them, or the options are very thinly traded, or they just didn't meet my, criteria. So even though there are companies that will declare Friday morning, none of them kind of met our criteria for either a potential breakout or a potential consolidating stock. All right. So that's where these next 2 weeks, it's going to be relatively quiet. But as you can see, Lululemon, Winnebago, Jeffries, Dollar Tree. In fact, KB Home, Lennar, the biggest home builder, declared earnings last week. We have KB Home then today after market close. And check out the home builders today. I mean, they're rallying pretty hard on, of course, headline news. So might be something to look at there. All right. So with that, let's get into what I was promising earlier. And that's taking a look at a trade on a quiet stock that actually we made a very nice return on last week. All right. So our trade that we gave out in last week's show was on Ollie's Bargain Outlet. Okay. OLLI. Always love this stock. It is a consistent, makes a consistent appearance in our delta neutral income portfolio. And you can see the stock here began to consolidate going into earnings, which is actually a sign of a potential breakout, by the way. All right. However, because this was as you can see, a $100 stock, okay, we were able to widen the break evens of the trade to the point where we could exceed any potential move, okay, that would come. Well, up to a reasonable move. All right. So what's interesting here is that, if the stock moved, let's say, 6% through earnings, well, guess what? Our trade would do okay if we put our break even, say, at 12% above or below the stock price. All right. So let's see how we did. All right. The results, well, they're just as we expected. Ollie's declared earnings, I believe, on Wednesday of that week, and the stock did pop up over 11%. But even with that spike in price, look at our break evens, which are the light blue line, the horizontal light blue line that appears on the top and the bottom of the stock chart there. That is the break even of our trade. And even with that gap up and trading higher, it didn't even get close to our upper break even. The stock finally settled up about 8.96% for the day. Then it dropped the next day. And then on Friday, which was expiration day, the stock had a whipsaw day. It opened lower, traded higher, came back down, came back up. But that was all it needed for us to have a great return on the trade. We generated so with this type of trade, we allow all legs to expire worthless. We do it at a credit. We keep the credit. Our credit in this trade was $153, okay, per spread. $153 per spread. Now, that doesn't sound like much, but this is based upon a $10,000 account, okay? So not only was that a 44% return on risk in just 5 days, 44% return on 5 days on a stock that goes sideways. Keep in mind, 44% return on a stock that goes sideways for the week, and we generated $153 per spread. So based upon a hypothetical $10,000 account, which is what this is based upon, that's a 1.53% return on portfolio for the week. 1.53%. All right. So that was our winning trade for last week. So what do we have for you this week? Well, we're going to do another quiet stock. All right. Because we were getting the option pricing that I liked for a potential move. The interesting thing that I have found for this week in earnings is a lot of these stocks don't have weekly options. Okay, a lot of the stocks appearing on our sheet, believe it or not, they have regular cycled options which expire on the third Friday of the month. Okay, so they have the traditional cycle. They don't have weekly options, and that proposes a little bit of a challenge, especially with some of these sideways strategies that we do, because what we do like is to capture high premium with a very short timeline, just like in Ollie's. Okay, we had the options were expiring in 5 days when we put that trade on, and we captured that premium after the earnings announcement. It worked out great. All right, so let's take a look at our trade, and I'll explain why I'm bringing this topic up. Our trade for the week this week is on Paychex. All right, but Paychex is, again, another one of those stocks that it only has traditional expiration style options. Okay, it does not have weekly options on it. So there are over 20 days left. All right, but implied volatility is elevated a little bit. Now, interestingly enough, IV did not move as high as it traditionally does. That can be a good or bad sign for Paychex. All right, but because this is a pretty consistent performer, and you can see here, look at all that time, the past 6 months, this stock has traded in between the break evens of our strategy here. This is an iron condor. And how to read this, the black line, just so you know, every time it changes directions, that's a strike price. Okay. What you're looking at here is on the put side, we're selling the 130s and we're buying the 125s, I believe. Let's see here. Or no, we're doing the 135s, buying the 130s. Sorry. So buying the 130s, selling the 135s on the put side. And then on the call side up there, we're buying the 160s, and I think we're selling the 155s on that side. All right. So that's how we build it. We sell two vertical spreads, the call spread and the put spread, that combine together. That creates a credit. All right. And we're looking for that credit then to add 1% or more to a portfolio, which it did. And I don't intend to be in this trade for more, for the full length of time. What I would like to see is a nice return after the earnings announcement, and then we could possibly take the trade off next week with time decay. All right. But this is our trade for the week. It's an iron condor on Paychex. All right. We anticipate just a quiet move there on Paychex. Again, single digit move of less than 5%, less than 6%, I think the number was for Paychex. All right. So that's it for this week. Okay. So again, this week and next week are going to be relatively quiet on the earnings cycle, but the second week of April, targeting the numbers of earnings start going up, and we have early JP Morgan likes to, I think there's one other stock that really is the first official earnings announcement, but a lot of the financials will start declaring the second week of April. All right. So this week and next week going to be a little quiet, but still some key names you're going to want to tune in next week, because more key names, just like this week, we have Winnebago, Lululemon, GameStop, a lot of stocks that are well known and fun to trade. All right. So that's our show for this week. Keep coming back each and every week, and I got more info for you and more trade alerts. So take care. Have a great trading week, and I'll see you again next Monday. Take care.